Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, not that you care. And in today's video, we are going to discuss the Rolex, and we're going to discuss Rolex prices crashing over 40% in about the last 2 years, what I believe will happen next. And to actually cut right to the chase, in case you're wondering, I believe that Rolex prices in the short term will go down, including on the gray market, and I believe they'll go up in the long term. I'm going to discuss a lot of other points, but if you just want to cut right to the meat and potatoes, that's it. And the meat and potatoes is going to take a big picture macroeconomic view. So if you're interested in that, if you're into economics, finance, making money, Rolexes, and the used, high-end watch market, that's what this channel is about. So thank you in advance for watching. And today I am wearing my Rolex Yachtmaster 2 solid gold, model number 116688. Very grateful that I bought it a few years ago. I paid a little less than retail for it, and it's gone up in value, right? Looking at the prices online, it's gone up in value, so I'm happy about that. So once COVID hit, pretty much the price of everything went through the roof, as you know and as I know. And unfortunately, we as Americans, and if you're watching this in another country, have short-term memories. But basically, we had a mania in the stock market. We had a mania in government giving out free money. We had a mania in the used car market, the new car market. All sorts of crazy stuff happened. And now we have the bubble deflating, thankfully, except the stock market's continued to go up, gold has continued to go up, and the cost of living and prices have continued to go up. So unfortunately, the other part of that is the earnings and wages haven't gone up that much. And so now we have an issue of lower class economic people and middle class people being squeezed. And, we're going to discuss that as well. But I also want to point out that, at the peak, a Royal Oak AP was 138,000, and that's now 70,000, which is a 50% decrease. The secondary watch market at its height in 2022 of March was 60,000. It's now 35,000. So that's a 40% drop. So in economic numbers or pure dollars and cents, if you invested 60,000, you lost about 25,000. And considering the stock market's gone up since then, if you were looking to make money on watches, you lost money, right? If you were a flipper, then you got in, you got out, you made a quick $700-800 or $1,500, whatever the standard markup is. And again, just to point out, when I buy my watches, it's not to make money, it's not to lose money, but to hold its value, hopefully, and increase over time. And it's something that I feel comfortable with, something that I enjoy wearing. And, if you're going to buy a watch over the long term to make money, you could have bought AP, the Royal Oak before it shot up to 138,000. You would have been really, really lucky. I don't think a lot of people did that. I think a lot of people who, and I do think the people that did do that, by the way, probably kept it anyway. So, and a Rolex Daytona at the height was 45,000. Now it's about 35,000. And what contributed to this? Well, a shortage of everything, cheap interest rates, right? Interest rates are now at 5, 6, 7%. Going off the Fed's reserve rate, if you want to borrow money from the bank, it's 8, 9, 10, 11%, depending on your credit. We had the cryptocurrency bubble. And what's also interesting is right now the cryptocurrency bubble, which in my opinion has always been a bubble, is much higher now than it was then. But, the prices of watches haven't shot up or back up. We also had a massive amount of government stimulus, in particular PPP loans, EIDL loans, the ERTC loans, which is still going on, but they've cut back on that. So you had the government handed out massive amounts of money to people who didn't deserve it, who were stealing it. They gave out free unemployment, just pure craziness. People didn't have to pay their student loans. People didn't have to pay their mortgages. People didn't have to pay their rent. So huge demand and a massive amount of money supply, right? So supply equals demand, or vice versa. Demand and supply, they're kind of intertwined. So when you have a massive amount of dollars chasing a few items, those few items shoot up. And to put that in a different perspective, what would have happened if the government sent everybody $1 million check, instead of the $1,400 stimulus check? The prices of Ferraris and Lamborghinis and everything would have gone through the roof. So everybody benefited due to COVID, in my opinion, for the most part. So there was also what contributed to it, supposedly supply chain issues, although the supply chain issues haven't resolved themselves by now. It's 2024. We're talking 2-3 years later. And there's a lot more rich people. In 2014, there was approximately 15 million millionaires, and now there's over 32 millionaires. And what do rich people want? Well, they want watches. They want high-end, goods. They want Porsches. They want, and of course you can tell me about the frugal millionaires and all that other nonsense, and it's another conversation for another day. So what's next? Well, there's no more cheap interest rates. The crypto bubble has come back up, but again, not that many people, I think, have benefited from it this time around. There's no more government stimulus, no more student loan pause, mortgages have resumed. And, we have, in effect, a K-shaped recovery, right? So that means one part of the economy kind of goes up like this for a certain class of people, and the other part of the economy goes down for a certain class of people that don't benefit and who get crushed, and that would be the middle class. And let's go through some bullet points. By the way, if I'm missing anything, please leave me a comment. If you feel like anything else contributed to the Rolex bubble and the other high-end used market watches, let me know. Please leave a comment below. I would greatly appreciate it. So, the other people, actually I take that back. There's been 4 groups in total, right? If you were into shoplifting and you live in a liberal city, you've been able to steal since COVID with impunity. And if you did get arrested for any reason, well, you don't have to pay bail or bond. You just get released the next day. And as a matter of fact, a lot of people who committed violent crimes, same story. You get released without bail. So our society in liberal cities is backwards, to put it very, very nicely. But you benefited. You went in, you robbed, whatever stores you could, and you went and sold it on the gray market, and God bless, right? And if you're a migrant, and I mean this with all due respect, but if you're a migrant in New York City and some other liberal cities, you've got to stay at you had the benefit of staying and are probably still staying at some very fine hotels for free, and got some very good food for free. As a matter of fact, one of my clients has been making, I don't even want to tell you how much money, but feeding migrants, and the markup there is just absolutely insane, and everybody has their hand in the pie and everybody's profiting. And New York City Mayor Adams plans to give migrants preloaded debit cards up to $10,000, and they're just going to give them out blindly. So we live in a backward society. If I lived in New York City as a taxpayer, I would be apoplectic. As a person who lives in New York, I can tell you that our tax policies here make me apoplectic, and that's what I got. So, and if you're rich, you've definitely benefited, and unfortunately, if you're middle class or poor, you've suffered. So what is some of the big picture economic stuff going on? Well, there's a divided economy. Boom in luxury travel explodes. If you're American Express, the CEO and the CFO recently came out and they're, praising, they're doing very well. If you're NVIDIA, you're doing very well. If you're a high-end food eatery like Sweet Green, who just recently came out and knocked the socks off their earnings announcements, God bless. And if you're in crypto, God bless. And if you're in the stock market, God bless. And then you have other people who are looking for relief loans, who are, middle-class people. As a matter of fact, 15 million Americans last year used buy now, pay later, including people who earn more than $100,000 a year for food and for eating instead of their credit cards. I mean, that's just sad. If you're into EVs, or if you're selling EVs, in particular, unsold Teslas pile up in mall parking lots. They're going to have massive discounts. Gucci, Karen's Gucci, warned and sent shares crashing most since 1992. This is from March 20th. So they basically came out and said that the luxury goods company issued a profit warning expecting sales at Gucci, its biggest brand, to plunge 20% year on year in the first quarter, notably because of slump in demand across the Asia Pacific region. And, they're getting crushed there. What else? Starbucks, right? That was over the news all over recently. McDonald's, for their gimmick, they're going to try to do $5 value meals. And why are they doing that? Because it used to be $18, or it still is $18. So imagine you have a family of 4. You go to eat at McDonald's one night out. That's $80 for, 4 hamburgers, French fries, and sodas? That doesn't make sense. And listen, at that point, go get a barbecue and go get 4 burgers and make it yourself. And I did that myself last week because I was just sick and tired of eating out, spending $50 to feed myself and my girlfriend. And it's much more cost effective to go to the supermarket. But if you want to eat out now, whether it's McDonald's, Taco Bell, or anything disgusting like that, or more high-end Chipotle, the cost is through the roof. Lululemon shares tumble on cautious consumer outlook. Olive Garden, Longhorn Steakhouse owner Darden warns lower income customers are pulling back. Yeah, because they're getting crushed from every angle and every direction, and they have to. And, I get it. Bad loans hit record high as used car prices suffer worst bear market ever. By the way, what does this have to do with watches? And we're going to get into that next. But the moral of the story is there's 2 parts to America of what's happening. So the first part is middle class, upper middle class, even and lower middle class and lower class, whatever. I don't know what the right politically correct word is absolutely getting crushed. And what else is happening? Well, then you have the other group of people like Watches of Switzerland, whose stock was about $4 a few weeks ago and now is over $5. That's a 20%, 25% increase, which is great, especially in a short term. And why did their stock jump up? Because, on a purely economic stock basis, their PE is only 9.5, which is cheap. Somebody else came out and analysis said there could be a 20% more jump. And in its most recent results, it showed revenues rose by 4% in quarter 4, 2024. And in the U.S., revenue rose by 14%. So you have people who are absolutely getting clobbered, and then you have people who are going out buying these high-end watches, Rolexes, Breitling, AP, Audemars Piguet, or Piguet, whatever you want to call it. And, so you have another class of people. And it's almost like we just, we don't have 3 classes of people anymore. You have 2. The middle class is being absolutely eviscerated. Joe Biden, who doesn't know what planet he's on, who is literally a walking corpse at best, and I mean that with all due respect, is absolutely good for nothing. Actually, that would be a compliment. But we're not going to get into that. So anyway, secondhand Rolex sales surge in underdeveloped U.S. market. So I deal with one jeweler where I buy my Rolexes. I have a few of them. I'm very grateful that I've been able to work very hard and be able to have to, go back and forth between which Rolex I want to buy. And after each tax season, last year I bought 2 Rolexes. This year I'm looking at a new one. I'm looking at the Rolex GMT Master 2 Gold Jubilee with the black and gray bezel, which I think looks very cool. But as stocks surge to all-time highs, demand in the luxury watch market continues to steer steady after a boom and bust in 21-22, especially in the U.S. Watches of Switzerland, the UK-based jeweler with a growing retail presence in the U.S. last week, said its U.S. sales jumped 14% in its fiscal fourth quarter, powering the retailer to better than expected results. Shares of the company rose 10%. The stock market's been doing nothing but going up. And, they're calling the U.S. market underdeveloped. So key driver for the company has been Rolex sales, particularly from its certified pre-owned program, which I guess if you're a gray market dealer, find that to be a joke. I understand why you would find that to be a joke. I happen to agree with you on that front. If I'm missing something, by the way, let me know. But, the demand isn't going down, and what's old is new again. Pre-owned watches are now watches of Switzerland's second biggest category. And why is that? Because Rolex, not for nothing, I've never seen any authorized retailer. Actually, I take that back. I've seen one authorized retailer have one new Rolex in stock, which was the Blue Smurf, or the GMT Master 2, which is in white gold with the blue bezel. And they wanted $42,000. And the only reason they had that watch there is because you could go buy it brand new for $32,000 instead of $42,000. So it's below retail. So the only person who would have bought that would have been an idiot, respectfully. And what else has happened? Well, they're also tying it in to the Federal Reserve now that interest rates have, quote, steadied. Or interest rates are way too low, in my opinion. That's another video for another day. So mano a mano, I do see pressure in Rolex prices despite the boom of what's happening right now. It sounds like an oxymoron. Yes, I understand. But at the end of the day, I don't think the demand or the support is there enough to keep prices going up. So I think there will be a little more of a pullback, but not much. And in the long term, I believe prices are going to go up, as they've continued to go up. And I think some of the precious metal pieces, which a lot of people have poo-pooed on, are going to go up as gold goes up. Gold's, I haven't been paying attention to it, but, I personally own a lot of gold stocks. And, case in point, this watch here, which weighs 9 ounces, I believe, and it has 8 ounces of 18 karat gold, meaning 75% purity. And so, I know that the meltdown value of this is just disgustingly through the roof, and it's Rolex's second most complicated watch. And they also discontinued it because it wasn't popular, but again, I buy what I like, and if it went down in value, I was okay with that, and if it goes up in value, I'm also okay with that. But I think over the long term, as gold prices go up, that's a great hedge to and a good way to buy gold, or just buy it directly as well. But again, that's more content and another conversation for another day. So if you found this helpful, if you think I missed anything, please let me know. I also tried to give you the main bullet points at the beginning, so you didn't have to sit there and go through the whole shebang of this video, because I know I can go on and on. And thank you, and have a great day.